Hello everyone, this is Dr. Mihir Shah once again with another video. In this video we are going to solve cash flow statement problem sum. This is the third video based on a video series based on solving cash flow. Again a very important video for all the TYBBI Sem V student appearing for financial reporting and analysis FRA paper. Okay, we have already solved two sums in the previous two videos along with the format we had discussed. Okay, so let us see which new sum has been brought about and how to solve that particular sum based on cash flow. Chalo. Okay, let us see how to solve this particular sum. I'll read out the question once. It is given that from the following summary balance sheet of XYZ Limited as on 31st March 13 and 14, prepare cash flow statement. They're giving you liabilities, they're giving you assets, and then they're giving you some additional information. During the year, machinery was sold for 2 lakhs. The written down value was 2,25,000. During the year, depreciation on machinery was 3 lakh. Profit on sale of land was transferred to capital reserve. Interim dividend during the year was 2 lakhs. Profit on sale of investment was transferred to general reserve, and income tax paid during the year was 2014. In 2014 was 4,50,000. Okay, all these adjustments have been given. So now, in order to solve our cash flow, remember the steps that we had already discussed in the previous two videos on cash flow. So first thing we will always start is with the adjust working capital. Remember, we need to add LA, that is increase in liability and decrease in asset, and less all AL, that is increase in asset and decrease in liability. Okay, so based on that, we will be first solving the working capital part. Okay, or just working capital part. So we start from the asset side now, and you look at the asset corner. The very first thing is land. It's a fixed asset, does not come here. Machinery, again fixed asset, does not come here. Investment does not come. Stock, yes, it was 14 lakh, it became 16 lakh, so there is 2 lakh ka increase. 2 lakh ka increase in stock, so it's an asset, so less. So I'll write less okay, we'll write here less increase in stock. The amount is 2 lakh, because from 14 lakh it became 16 lakh, so it is 2 lakh ka difference. Okay, so that's negative 2 lakhs. Okay, after that debtors, it was 9 lakh and it became 13 lakh 50,000. So there is 4 lakh 50,000 ka increase in debtors. Again, increase in debtors, same funda we will use. So I'll write a less increase in debtors. The amount was negative 4 lakh 50,000. Because from 9 lakh it went to 13 lakh 50,000. Next is bill receivable. It was 2 lakh 45,000 and it's become 2 lakh 90,000. So there is a there's an increase of 45,000 in bill receivable. So same funda, less increase in bill receivable from 2 lakh 45 to 2 lakh 90,000. So 45,000 ka increase. So that will be less 45,000. Okay. Now next is cash. Cash does not come here. It will come later on. We'll see that. Now we come on the liability side. Equity share doesn't come. General reserve, capital reserve, profit and loss does not come. Creditors, yes, it was 6 lakhs and now it's become 9 lakhs. So there's an increase in liability. Increase in liability we add. So add increase in creditors. Okay, creditors were 6 lakh, it became 9 lakh, so 3 lakh ka increase. Okay, provision for tax, proposed dividend, they do not form a part of current asset in cash flow, so that's it. Nothing else has been given, so we are done with the working capital adjustment part. Okay, so there were 4 itineraries. Step 1 is done. Step 2, we note down the balances. Cash balance, opening balance is 3 lakh. That is cash and bank balance. I given you 3 lakhs. So I'll write it in cash only. 3, 4, 5. So there is no bank. So we'll write here cash. Similarly, closing balance is 3,90,000. So our final answer has to be 3,90,000. Okay, chalo. Now step 1 is done. That is that we need to note the working capital. Step 2, opening balances are done, opening and closing balance. Step 3, now we start with the adjustment part. Okay, very important, very crucial part. Okay, now during the year, machinery was sold for 2 lakhs, having written down value of 2,25,000, and machinery is already there on the asset side. So we'll start with the working note for machinery. So I'll get the sheet out. Okay, we will make a rough working note for machinery. Now remember, machinery opening balance is 13,50,000 and closing balance is 28,70,000. Opening, closing. Okay. Now they are giving you during the year machinery was sold for 2 lakh, having written down value of 2,25,000. Okay. So having 2,25,000, we have sold it for 2 lakh, meaning we have sold it at a loss. So first of all, I'll write here by cash. The machine we have sold for 2 lakhs. The money is coming in, but we made a loss. So by profit P&L or loss of 25,000, written down value was 25. Okay. Now, along with that, is there anything else which they have given you in the question? We'll have to look at that. It was given that during the year, second adjustment, depreciation on machinery was 3 lakhs. So we have to provide depreciation by dep 3 lakhs. Okay, that's it. Nothing else has been given. Us third and fourth and fifth adjustments are nothing to do with the machinery. So we tally the machinery part. Okay, so machinery 2 lakh plus 25,000 plus 3 lakh plus 28 lakh 70,000. It comes to 33 lakh 95,000. Now from 33 lakh 95,000, when you minus 13 lakh 50,000, the difference that you will get will be 20 lakh 45,000. Now remember, whenever you get a debit side balance, it will be 2 cash bank. This is nothing but basically your purchase. So now. So this is it. We have tallied the machinery account. Now let us see how we post all those things in our cash flow. 2 lakh ka asset we have sold, machinery we have sold, and 20 lakh 45,000 ka asset we have purchased. So there is a sale of machinery, there is a purchase of machinery. First we will note down that particular the adjustment. So machinery is an investing activity. Okay, so I'll write here sale of machinery. Monthly, whenever you sell, you get money. So I'll write add sale of machine. Okay, 2 lakh amount was there, so we get 2 lakh add, money is coming in. And we purchased 20 lakhs, so less money is going out, less purchase of machinery. Okay, 20 lakh 45,000, so negative, it will be negative 20 lakh 45,000. Okay, so first and second. Now depreciation and loss, they both are expenses P&L account on the adjust non-cash itinerary. So we will note down both these things. So I'll note down dep on machinery. The depreciation on machinery was 3 lakhs and loss on sale of machinery, okay, it was 25,000. So all the expenses we add. Okay, so this is how we had to post all the values of machinery account into various areas of our account. So always remember, one impact will always be in the non-cash, the other will be either investing or finance, depending on whatever asset you or whatever account you are solving. Okay, so machinery was an asset comes under investing activity. Okay, chalo. So with that, machinery account has been completed and all the posting has been done. The next adjustment, so we are done with the first and the second adjustment. Now we start with the third. Profit on sale of land was transferred to capital reserve. So they're giving you some profit on land. So we will solve land and building. So land ka account we will prepare. Again, the opening balance of land is 15 lakhs and the closing balance of land is 11 lakh 50,000. So land ka they have given you that profit on sale of land was transferred to capital reserve, number one, and interim dividend that doesn't come here. Profit on sale of investment doesn't come here. Income tax paid also doesn't come here. So okay, there's only thing they are giving you that whatever is the profit on sale of land, it was transferred to capital reserve. Okay. So no. We have done the opening balance, we have done the closing balance. Now they're telling you the profit. Profit always comes on the left side. It will be transferred to capital reserve. So now from where to get that amount? So we jump to the capital reserve account. We'll try to check in the liability side capital reserve. Now they're giving you capital reserve opening is not there, but closing there was 3 lakh ka balance. So this 3 lakh has nothing. It has basically come out from the land use. Okay, sale of land. So 3 lakh will come here. We will tally it. Okay, 15 and 3 is 18 lakhs. Okay, so 18 lakh minus 11 lakh 50,000 will be a buy cash bank. So that is sale. Okay, we are selling. So the difference comes to 6 lakhs 50,000. Okay, so the moment we have sold this particular land, so first impact will come the moment we sell, I'm going to get money. So add sale of land, which came to 6 lakhs 50,000. Okay, so the moment we have sold, the money comes in. Okay, now remember in this capital reserve ka one entity, so land account debit to capital reserve, and in the balance sheet they have already told you that amount has been transferred. Okay, there will only be one effect, it's not in the adjustment. So one effect has already been posted here. So capital effect ka capital reserve ka second effect will not be there in the solution. Okay, it will not come in the cash flow because there's only one effect and we have already used that effect in the land account, so that's done. Nothing will appear in the cash flow. Okay, chalo, next adjustment number 3 was done. Fourth is interim dividend was paid during the year. Now interim dividend not there, part of the question, so direct entry, interim dividend is paid. So first of all, it is an expense for us. Okay, it's an expense, so it will appear in P&L adjust. So I'll write here interim dividend. The amount of interim dividend paid during the year is 2 lakhs. So 2 lakhs. Okay, again, interim dividend is a part of financial expense activity. So the moment we pay interim dividend, money is going out, less interim dividend paid. The amount is 2 lakhs. So here it will be money is going out, so minus 2 lakhs. Okay. Next is profit on sale of investment was transferred to general reserve. So again, now third account we will prepare investment account. Okay, the opening balance of investment was 9 lakhs. The closing is 7 lakhs. And then they told you profit on sale of investment was transferred to GR. Now when we come back to GR account, on the liability side, if you'll check, the opening was 3 lakh, then it became 5 lakh. But there's an increase of 2 lakhs. So that 2 lakhs is nothing but transfer to GR. So the transfer to GR was 2 lakhs. So we tally this account. So 9 and 2, 11 lakhs. 11 lakhs. 11 minus 7 will give you 4 lakh. That will be again nothing but when we are making up, we are selling investment in this case also. So buy cash bank, 4 lakh is the difference. The moment there is a difference, it is an investment, it's a fixed asset. We have sold, so money is coming in. So add sale of investment. The amount is 4 lakh, so positive 4 lakh. Okay, so this adjustment also is complete, and so we've done with machinery account, land account and investment account. Okay, so I got this totals also. So we have land, machinery, land and investment is done, and all the effect where it appears in the cash flow has also been completed. Okay, last is income tax paid is 4,50,000. Now income tax ke liye there's provision of tax also given in the question, so we'll have to create one more account. So a very important one. Okay, look at this very carefully. So I'm writing here the tax, the income tax. Now provision for income tax is a liability, so we'll have the by opening balance on the credit side, which is 5 lakhs. The closing balance is 5,50,000. And it is given that your income tax has been paid during the year, which is 4,50,000. So we tally this account. Okay, 4,50,000 has been paid, closing was 5,50,000, so total comes to 10 lakhs. So 10 minus 5 is 5 lakhs, that's my balance. Okay, so that comes basically my P&L. So that's my provision, and this is the amount that we have paid. Provision it will come 5 lakhs, the income tax provision is of 5 lakhs, and income tax paid is 4,50,000. Okay, so let us post these two values now. 5 lakhs, so I'm writing here provision for tax and income tax paid. Income tax is paid 4,50,000, so less 4,50,000. Okay. So now with that we have completed our basic all the adjustment which are related to what you say related to the sum. All the adjustment has been cleared out. Chalo, so now we will, so that's the step. See, first step adjust working capital, second opening, third all the adjustments are done. Now we check the asset side, say whatever is pending. Land done, machinery done, investment done, stock done, debtors have been completed, bill receivable are done, and cash is also done. So all those assets, everything is over. Now comes equity share. Equity share 45 lakh, it became 52 lakh 50,000. So there's an increase in asset. So if you have increased, we have issued shares. The moment I issue, money is coming in. So add equity, issue of equity share. Add issue of equity share. So it was 45 lakh, it became 52 lakh 50,000. Difference is 7 lakh 50,000. So there's an increase of 7 lakh 50,000. Okay. Next, general reserve, it was 3 lakh, it became 5 lakhs. 2 lakhs there's an increase, but we have already transferred that 2 lakhs. Okay, we have already transferred that 2 lakhs in the investment, so it is nullified. Okay, then comes capital reserve, it was 0, it became 3 lakh, but that is also transferred in land, so that is also nullified. Profit and loss, okay, yeah, now comes the profit and loss, that's the opening part. It was 3 lakh in the opening, 4 lakhs in the closing. Formula is closing minus opening, so 4 lakh minus 3 lakh is 1 lakh. Okay, creditors we have done, provision for taxes done, proposed dividend is remaining. Now proposed dividend mein opening and closing both the balances are given. Opening is 3,95,000, closing is 4,50,000. Remember, the closing dividend or closing proposed dividend will always come in adjust. So I'm writing here proposed dividend for my current year. So that's a non-cash expense because it's not an expense. But proposed dividend of last year, it was proposed, so this year we have paid, so it will be less proposed dividend paid. This is of the last year. Okay, proposed dividend of last year, it has to be assumed that it has been paid off. Okay, so 3,95,000 ka payment has been done. Okay, so with that I guess all the itineraries has been posted. So chalo, now let us start with the last part, which is basically to tally it out. Okay, so we are going to add up all the so that is 3 lakh plus 25,000 plus 2 lakhs plus 5 lakh plus 4 lakh 50,000, which comes to 14 lakh 75,000. Okay, for adjust non-cash items ke liye, it is positive 3 lakhs minus 2 lakh minus 4 lakh 50,000 minus 45,000, so that's come to negative 3 lakh 95,000. So I'm noting it down here as this is negative 3,95,000. Okay, so now very simple. Net profit plus adjust less the non-cash less the adjusting working capital. So 1 lakh plus 14 lakh 75,000 minus 3 lakh 95,000 will give you 11 lakh 80,000, that is cash generated from operating activities. So 11 lakh 80,000 less 4 lakh 50,000 comes to 7 lakh 30,000. So cash generated from cash flow from operating activity is 7 lakh 30,000. Next, from investing it was positive 2 lakh plus 6 lakh 50,000 plus 4 lakh minus 20 lakh 45,000. So it comes to negative 7 lakh 95,000. Now from financing it was positive 7 lakh 50 minus 2 lakh minus 3 lakh 95,000. So it comes to positive 1 lakh 55,000. So now we take the three totals. So it's like 7 lakh 30,000 minus 7 lakh 95,000 plus 1 lakh 55,000. We got the increase in cash balance of 90,000. So 90,000 plus 3 lakh will become 3 lakh 90,000. So with that our cash flow statement tallies. Okay, so our cash flow statement had tallied based on the problem sum. Okay, so this is how you all had to solve this particular problem sum. This is the third type of sum that we have done in, sorry, this is the second type, no, this is the third type of sum that we have done in the cash flow statement. Okay, so first step, adjust working capital, then we note down the balances, then we solve the adjustment, then we take out the remaining part, we note down the opening profit and loss, and then we start with the tally part. Okay, so I hope everyone have understood this. Okay, those who have directly started watching this video, there are other two videos which have been created based on cash flow. See that, you'll first go through that and then you can go ahead. Few more videos will be posted on cash flow statement, how to prepare and how to solve the sum. So stay tuned for that. So I hope everyone have understood the sum. With this, we will be ending this video here. Thank you.